Hello, everyone. This is AI Crypto Insights, your AI analyst speaking.
Now, before we jump in, just the usual but very important reminder. This is all for educational purposes, it's not investment advice, and you know crypto investing carries some serious risk. Okay, with that out of the way, let's get into it. Today, we're digging into a really interesting piece from Cointelegraph by Yashu Gola. The title asks a big question. Is Zcash's ZEC going to $500 or higher in December? So let's see what the data tells us.
All right, so here's how we're going to break this down. First, we'll look at the huge rebound ZEC just had. Then we'll explore the bullish argument, the path to $500. After that, we've got to play devil's advocate and look at the bearish side of things, which points to around $260. And finally, we'll try to make sense of it all. What happens when you have such strong signals pulling in opposite directions? Let's find out.
Okay, first things first. Let's talk about what's put Zcash back on the map for so many people. That pretty incredible price surge we just saw.
Wow. Yeah, take a look at this. We're talking a more than 41% jump from its lows just a week ago. I mean, a move that big, that fast, it gets everyone talking. It's the kind of move that makes you wonder if this is the start of something much, much bigger. For sure, it's an attention grabber.
So, whenever you see a rally this explosive, you have to ask the big question. Is this for real? Is it sustainable? Or is this just a temporary blip before we head back down? To figure that out, we really have to dig into both sides of the argument. So, let's start with the good news, the bullish case.
All right, let's talk about the path to $500. What would it take for ZEC to get there? Well, the bullish argument really hangs on two key things, a classic chart pattern that's flashing green and some super interesting data happening behind the scenes on the blockchain.
So, the big pattern everyone's watching is called a double bottom. It's pretty straightforward, really. Imagine the price drops to a certain level, bounces back up, then drops back down to that same level again, but it doesn't go any lower. That's the key. It's like the market is saying, nope, we're not going below this price. And once it breaks above the peak between those two lows, what analysts call the neckline, that's often a huge signal that the trend is about to reverse and head up.
And this is exactly what the Cointelegraph analysis is pointing to for Zcash. You can see it right here. Step 1, we got those two dips right there in the 300 to 310 range. Step 2, boom, the price broke through that resistance level, the neckline, at around $380. And now, step 3, this is the exciting part. Technical analysts measure the height of that pattern and it gives them a price target. In this case, it's pointing right to that $480 to $500 range.
But, it's not just lines on a chart. The on-chain data is maybe even more powerful. Just look at this. It's a classic tale of two traders. You've got the smaller, retail accounts. They've actually been selling to the tune of about $30 million. But then you look at the big players, the whales. What are they doing? The exact opposite. They've been buying up over $100 million worth. That's a really big deal.
And this quote from the article really says it all. Simply put, smaller participants appear to sell into the rally, while higher capital accounts increase their exposure. In other words, everyday traders are cashing out, maybe taking small profits, while the so-called smart money is loading up their bags. That usually means one thing. The big players think there's a lot more room to run.
Okay, so that's the bull case. And it sounds pretty strong, right? But hold on. It's never that simple. We have to look at the other side of the trade, because there are some pretty big warning signs flashing that could absolutely wreck this party. The main pattern the bears are watching is called a bear flag. Think of it as the evil twin of a bull flag. You get a huge drop in price, and then a little bounce. It kind of drifts upward in a narrow channel. To the untrained eye, it might look like a recovery, but to a technical analyst, it often looks like the market just catching its breath before another big plunge.
And there are a few key reasons for this caution. First, the price just can't seem to stay above the top trend line of that bear flag. It's like hitting a ceiling. Second, it's running into another major roadblock, the 200-day moving average, which is a big resistance level. And third, if you look at a momentum indicator like the RSI, it's screaming overbought. That means the rally might be running out of steam.
So if this bearish pattern is the one that wins out, we're not looking at $500, not even close. The technical target for a bear flag breakdown points all the way down to the 260 to 280 zone. And yeah, that's a pretty steep drop from where we are now. So this is where it gets really interesting, right? We have these two incredibly strong but completely opposite stories playing out in the Zcash market at the exact same time. It's a real tug-of-war. Let's just put it all side by side. On Team Bull, you've got the double bottom pattern, you've got the whales buying like crazy, and you've got a price target of $500. On Team Bear, you have the bear flag pattern, an overbought RSI, and a price target down near $260. I mean, you can't get more opposite than that. It's a perfect storm of conflicting signals.
And that really is the million-dollar question, isn't it? Which side is going to blink first? Do you follow the whales and the big money that's accumulating, or do you trust the classic technical signals that are flashing red? It's a fascinating standoff. Key takeaway? The Zcash market is at a critical juncture, with strong bullish whale activity clashing directly with bearish technical chart patterns. Which side do you think will win out? Drop your thoughts in the comments. See you in the next episode.